The Federal Reserve increased interest rates by 0.25%, but something else happened at this meeting that was quite significant, and I'm not sure if everybody realized it. So that's what we're going to discuss front and center today. I'm going to show you what artificial intelligence said, not just about this meeting, but about the previous ones as well. I'm going to cover why this is all significant for you, your portfolio, your savings, and of course, everything that's happening in the economy. Let's begin. First things first, I want to show you, as I always do, the press release itself coming directly from the Federal Reserve's own website, where they say they are going to increase interest rates by 0.25%, or like they like to call it 25 basis points, and that they have to continue to be strong against inflation. I sat through the entire FOMC meeting. I looked at all of the information surrounding this. Why? Because you don't have to. All you gotta do is tune into this channel so that you don't have to fall asleep. You can simply watch these videos, okay? I do the hard work for you. Fed announces smallest interest rate hike in a year as inflation eases somewhat. So this is 25 basis points. Previously they did 50 basis points and 75 basis points. Now they are going down, and they have highlighted the fact that this will be the case. So maybe the next one in March is going to be another 25 basis points based on what I got out of the statement, as well as the little interview situation that they do afterwards. If you have seen the channel before, I describe what they do at 2 p.m. They bring out their statement, then the market digests it. What are they saying? CNBC articles, Bloomberg articles, Reuters, they're all being written. I take a look at all that information. I try to digest that myself. Then at 2:30, Powell comes out, he reads a prepared speech, and then from there, he takes questions from the reporters. They're all softball questions. They're all nonsense, except for little bits and pieces which I try to take in and make some sense of. There was some really interesting information that was unlike what was in the previous ones, and I really haven't seen this before. We'll talk more about that in a second. You got to stick with me. I'm going to break it down here, okay? Here we have it. This is the Fed funds rate as it stands right now. This is basically not including today's. And it's just showing us that we've been increasing over the last little while. However, when you look at financial conditions, this can be measured in many different ways. I'm showing you the financial conditions index, okay? There are many, by the way. There's a Bloomberg Financial Conditions Index, and then we have the NFCI, National Financial Conditions Index. It doesn't matter. The point I'm trying to make here is that if you can see this clearly, look at that red line. Now, this is a chart that goes back from the beginning of 2021 up until the present. So remember that they increased, if we go back to the Fed funds rate, they started to increase interest rates right around this point. Let's just call it March, okay? March of 2022, so like about a year ago, we'll say. Over the last year, interest rates have been increasing, right? We know that. But the financial conditions have been easing. How strange is that? Well, it's not just one factor. Like, yes, they're doing quantitative tightening barely, and they're increasing interest rates, in my opinion, barely, but the financial conditions in general have loosened. They are doing reverse repos. They're getting all kinds of cash funneled into this system from one direction or another, stimulus. You're looking at the Treasury and what they have. All of these things go into what makes financial conditions. And in general, that's been loosening. In fact, they were asked, Jerome Powell was asked this question at the meeting, I think twice at least. And he was basically saying, we don't really like to see that. And yet they are. Is anything to be done about that? Is that going to have an impact on what they do with their tightening of interest? No, absolutely not. The Federal Reserve, Jerome Powell in this case, I've never seen a more limp noodle in all my life. I mean, really, I've seen a lot of these meetings. I've read the statements. I've read the history. I've read Murray and Rothbard's Great Depression book, which describes everything in detail. I can name you countless books I've read about all the excruciating minutia of detail that has come along with the Federal Reserve, and I've never heard of anything like this. It was like cooked spaghetti out there. It was like, I don't know. I don't know how else to explain it to you. It was the weakest thing I've ever seen. It was a real pushover of I don't even know what to call it. Anyway, the point is, it was so easy. In fact, the market doesn't believe the Federal Reserve. That's the point of this video today and what I want to get to. Fed's median dot, so like where the Federal Reserve anticipates that they will be, it's going to go over 5% on the Fed funds rate. That's the expectation. However, the market is basically saying they're going to start cutting interest rates very soon. That's the expectation. We don't know if that's going to happen. How unusual is it? I mean, this is just a comparison between the financial conditions and the Fed funds rate, and you could see how wide we're getting. This is not supposed to happen. There's always going to be variances, but this kind of thing is not supposed to happen. So does that mean that they're going to start cutting immediately and then the market is right? Or is it going to flip and change? Some people are saying that that's going to happen. What does artificial intelligence say about what has happened at this meeting and the prior ones? This chart goes back to financial crisis timeframe, and you can see hawkish sentences, and that's the kind of brownish color there, and those have declined over the last while. So along with the financial conditions has come those hawkish sentences being removed from the statements. Do you see that? Isn't that really interesting? Really, really interesting. Now, they were getting all tough in 2021, but that really changed in 2022 as they were increasing interest rates. So isn't that so unique? That's what Bloomberg's artificial intelligence reading through all of that data has provided. I hope you found this informative, and you let me know in the comments below. Has anyone else shown you this chart? It is really telling, where we compare the Fed funds rate, financial conditions, and what was actually said. This type of correlation should not be ignored, and that's why I'm bringing it to you. I'm bringing you the depths, the absolute depths beyond anybody else as far as I'm concerned. So I hope you do appreciate that right here and now. All you gotta do is hit that subscribe, and I will bring you the latest and greatest every single day. Every day. Now, what's happening as you extend out further? You look at mortgages. Mortgage demand took a big step back last week, even after interest rates fell further. The reason I mention this is that I believe if we go the way it is, we can see mortgage rates declining, and I wouldn't be surprised if we do see the demand start to pick up at some point, because they're saying, hey, here we go, and investors start piling in. Why not? Interest rates, maybe they won't go much further from this point on. We really don't know. Talking about the stock market, NASDAQ 100 futures rise after Meta posts quarterly revenue beat. Okay, that's what you heard, okay? Meta, or Facebook, they did so well on their quarterly revenue that it actually pushed the stock, which had been beaten severely over the last while, up 17% in a single trading session. Very unusual for such a big company, right? Or was it this? Facebook parent Meta announces $40 billion stock buyback. And let's be honest, that's what this is all about. It's not about the revenue. It's not about the metaverse, the weird metaverse. It's about a $40 billion stock buyback. That's what they needed to announce. Just like other companies will do the same and push their stocks up higher. Please understand what this market is really trying to tell you. We've got layoffs coming left, right, and center. That's the real economy. FedEx is laying off more than 10% of its management. Rivian to lay off 6% of its workforce. Smallest US firms are shedding workers fast as the economy cools. So all of these things are lining up right now today, but the stocks don't necessarily have to feel it. What we're seeing with the stock market, in my opinion, is actually bullish. And why? Because they are willing to devalue the currency as much as humanly possible. They want to put, like if you're earning US dollars, they want to turn it into confetti. You have to realize that. You must realize this is very important. Looking at the PMIs, manufacturing PMIs coming down significantly over the last while through that period. Not a strong sign of an economy at all. New orders down as well. That should be something to signal to everybody to watch out. And then we have this statement basically saying, despite rising in January, the PMI remains at one of the lowest levels recorded since the global financial crisis, indicating a worrying steep rate of decline in the health of the goods producing sector. There's more to it, but I just wanted to show you that. Not a good thing overall when you look at it on multiple levels, manufacturing and so on, but financial conditions are real easy, real easy, and that's what you need to know as an investor. You watch these things, you watch how they correlate. I brought to you today 3 things that all came together. We're talking about the statements and how artificial intelligence was able to read all that. They outputted it very clearly. That coincides with what we saw with the financial conditions directly. And then you look at the actual Fed funds rate, the interest rate. All of these 3 things had a story to tell. I hope you appreciated it. Please let me know in the comments what you think about these 3 things, how they tie in together, and if any of the others out there are talking about that on this level, please let me know. I'd really like to be aware of what the others are talking about. That's it. Hit subscribe down below so every single day you get the latest and greatest. Take care.